Welcome to Japan Market Brief, the daily English audio update on what moved Japan's markets and what matters next. April 14th was a much stronger day for Tokyo. Japan's Nikkei 225 rose 2.43% to 57,877.39. The market reacted to improved hopes that dialogue between the United States and Iran could continue, which helped bring immediate oil fears down a notch. That gave Japan something it badly needed: a less stressful external setup. WTI crude briefly fell below $100 a barrel, and that mattered a lot for Japan. Lower oil changes the tone quickly because it eases pressure on imported fuel costs, petrochemical inputs, transport pricing, and household energy concerns. The yen also improved slightly. Dollar-yen eased to around 158.7, which helped reduce part of the imported cost pressure that had been building when the currency was weaker. So today's move looked like a genuine relief rally. But it still came from external stabilization rather than a sudden improvement in Japan's internal growth picture. There was no major new Bank of Japan move that changed the market. Instead, the more important point was that the oil and yen combination became less hostile. That was enough to let equities extend higher. Still, today's move should not be read as a final all clear. The market is still sensitive to every change in diplomacy, crude prices, and shipping risk. Today's stock to watch is Japan Post Holdings. Japan Post resumed accepting all U.S.-bound mail from April 14th after adapting to a new system that requires customs duties to be paid in advance through a designated application. That might sound like a narrow logistics update, but it is actually a useful market signal. It shows what adaptation looks like in the current trade environment. The point is not that policy friction disappeared. The point is that companies are starting to build workarounds and resume normal activity where possible. That matters for Japan because a large part of the economy depends on keeping cross-border trade, shipments, and business processes functioning even when tariff rules become more complicated. Japan Post is therefore more than a postal story today. It is a practical example of how Japanese operators are adjusting to a world where trade friction remains, but business cannot simply stop. That makes it a helpful stock to watch in this market. It sits between logistics, regulation, consumer shipments, and e-commerce operations. There were still warnings in the background. NHK reported that China's export growth slowed sharply in March. That matters because even when oil pressure eases, global trade demand can still weaken if costs stay elevated too long. There was also a domestic policy angle. The temporary halt in foreign worker intake for the restaurant sector reminded investors that labor constraints are still affecting parts of Japan's service economy even as equities rebound. So today's strength was real, but it remained selective and externally driven. For the next session, watch three things. First, whether oil stays below $100. Second, whether dollar-yen remains calmer than it was last week. Third, whether more companies show practical adaptation to trade and supply friction rather than disruption. If those factors hold, Tokyo can keep building on the rebound. If not, the market may quickly fall back into the same fragile pattern seen earlier this month. That is all for today's Japan Market Brief. Thanks for listening.